screens. Right, this is everything, I guess, is it?
Day 7, your eyes will change.
You know what? I thought it must just be a phenomenon where every time I open, one day I'll work out how to do it, I guess. Every time. There we are. Multiple screens, you say. Right, so I'll take that grid up out of the way, minimize it. Where's my group? There we go. Right, I'll just turn a ding dong bell off and we'll get going. There we go. Right, let's have a quick roundup on what we're doing. Gold, we've done quite well on gold. The bots have done pretty well, and the bots are in what's that? Win max. The two 15-minute ones are out, and two 5-minute ones are out. So yeah. So 13, 14, 15, 16. So it's 17 gold trades and 115 out of 17. Bit much that, and that's just today. And we're in some more gold trades again. Fractal break here. I don't know if anyone took the fractal break in the room, did you? Fractal plus 15-minute bar there on gold for this afternoon. There, nice breakout. Stop under the fractal here. 15 pip stop, 2% risk. Looking for 15 for a 2% trade. If you haven't done this already, forget the bots. We don't count the bots as winners really, because not everyone's got the gold robots. But we're looking for another 2% here. That will make the bag for the day of nearly 8% on gold today, if this comes in. What I'd like to do, I think we'll probably attack 38.93 today. So what ideally I'd like to see is on the open, we'll get a wee pullback and then the market will just surge. We've got no NFP today, of course, because US shutdown, which only served to put strength into gold, as well as probably interest rates are probably more than likely going to be baked in now after weak jobs data, etc. So I can see gold easily doing 83.93 today. I think that, just get the daily edge out. I think, what were the figures that I posted early doors on gold? Gold, crude. Oops, gone past gold. FTSE, going great. We'll review the progress. So far, gold, yeah, 38.94, then 39.47, and then a stretch over the next 6 to 8 days, which is my little test on the forecast, and just to prove really that it's absolutely festooned with Fibonacci traders. So where is the I have the target set up here. Oh, I did do. Where is it? There we are. We are going, here we are. It's put your neck on the line. 4,023 on the 15th of October. You got to give me a day leeway on this, because this was forecast back at the end of in September. And we're heading there, getting there slowly. We're ripping money out of the market every single day on gold. I don't think I've had, in the past 2 weeks, nothing less than 5% a day on gold. It's been going really, really good. Right, so we'll come back to gold. And then we'll, US 500. as you could see, we did an early gap trade and posted it in here at 12 o'clock. Oh no, this was right. Okay, I'll get this right. This is the FTSE hidden full target. Very nice. Got the wrong time frame. Early gaps. So here we are. These are the other gap trades that I put in. So half an hour ago, we were looking to get the S&P with a 2% risk, and as you can see now, I've took that 2% risk off the table. I'm now down at zero risk with a stop to entry on that, and on the Dow, we are heading for the closing of the gap. So let's just have a look at that. So S&P. Oh, right. Hi, everyone. Hi, all. Stuart, I'll be in sunny Spain soon. Did anyone prior to coming on the live stream, anyone try and do gold at all? Be quite interested for your feedback. Not good doing gold, doing the S&P and doing the S&P and the Dow gaps that we always do. I also be interested also for people. All right, okay, great. Some people doing it, fantastic. I always be interested as well as for cash markets. Interesting point here. All cash markets have an open and a close, and therefore all have deterministic pivots. And without pivots, and if you are trading any index, if you don't have pivots, you're absolutely flying blind. Does anybody use pivots? You can just say yes or no, or yes or no to pivots. That would be quite interesting if anyone's actually using pivots in the room. Not in the room. Everyone uses pivots in my trading room. I just thought individually, do people actually use pivots? Everyone's quiet again. Right. So if if you were 24 minutes past, market opens in 6 minutes, the gap. You show you the document that I actually generate every day. It's in the. We'll go over what this document is as well for people who are not au fait with it. It has, the risk on, risk off, and the cash pivots. And this is posted every morning at 7:30. I'm not going to drill on about that. I'll take you through that later. And part of that is this table in here. This determines when we trade the gap, we need to know what the average true range or the impulsive move actually might be, because markets do move in impulsive waves. You can see wave one down here, pull back up, another wave one, pull two. They move in waves and they move in impulsive waves. So what we need to understand as day traders is what that impulsive wave might be in day to day as volatility goes up and down in the markets. So volatility's gone has gone up in the Northern European session and the American session. It's gone. You can see it's gone down on the Dow, down on the US 500, up on the Nas, and down on the on the DAX and down on the FTSE. So when you got the Nasdaq, that's very impulsive. So I'd imagine the Nasdaq's going to come rattling down to the close very rapidly, and then take off like a scalded rat, which we will trade in the first 15 minutes. So what I'm looking for here is at least 7 pips away from for the S&P, at least 7 pips away from here to trade that non-cash hours gap. Kind of 5 pips, that's not really good enough. 7 where can we do 7? I'm just going to set it to 1%. 7 under this flat bottom. I can actually, that gives us 7. So if you haven't already traded this, we've been trading in the room, but obviously for the people on watching this on the live stream will obviously don't have the benefit of the signals and things that we do in the live room. So what I'm going to do here is we're going to have that drop in under that flat bottom here, get that to round about 6722.5.
Order rejected.
Good old IG. They don't want anybody to trade this, but we can get around that. Everyone in the room, you know how to get around that. I'm not going to tell you how you get around it because people from IG watch this, and they will close the gap to allow us to do this. So what we want to be able to do here is if you put a line in the sand here, you see the market come down to here, then what you want to do is just smash the close straight away. Smash the sell straight away. So completely risk-free in the first trade. It'd be nice to get a 2% leverage on that. 3 minutes away from the close. Now you're going to work out which one you're going to do because you can't do both. We can't do both trades. And I think what we will do, we'll concentrate. Shout out guys in my room if you would to me about the S&P, and then we'll trade that. I'd like to trade this gap on the Dow. We need to be at least 49 pips away from the gap, and we are. Oh, I'm going to set that to 49, and let's see if we can actually put this trade on. That's the minimum requirement, 49 pips. Ideally, it's 98 today, which is a 30% ATR. We're going to just put that in here at 46,572. Will it allow us? Yes, there's a lot more liquidity in that market, and they're allowing us to put that order in. So what we're looking for, the trend is up, determined by the 200 EMAs. The price action is down, determined by the 9 EMA. In other words, if we are trading under the 9 EMA, price action is deemed as negative. If we're trading above the 9 EMA, price action is deemed as positive. Wilson project, never use them. Well, that's interesting. It becomes incredibly difficult trading a cash market, not knowing where all the pivots are and where all the pro traders and institutions are buying and selling from. I would suggest, I'm not sure, but you can certainly get the all the algorithms for TradingView. In fact, one of our traders has actually coded the pivots for TradingView. So I could, if you DM me, I could send you that, or you can get the pro real-time pivots off my website, and I can give you an explainer on what the pivots do and how to install them on pro real-time. It will change the way you trade. So let's see what's happening. It's quite normal for there's one or two things when we're quite close to the pivot. We the market runs up to try and get rid of a lot of stops, and then comes down and hits the close, or we rush straight down. Now, the risk is that we're above the daily high. It's a positive market, and people will buy. But we've got to go for it. This particular trade is not risk-free. We only got risk-free on the S&P. The market's open now and it's running up. However, if we get stopped, we are going to trade this again. We know there's a futures market stop here on CBOL. So if we get stopped out, that's not an issue because we're going to go straight back in with a position, but our stop's going to have to be above CBOL, and it's got to be equidistant down to the close. So the so that this is the Dow. So we'll just watch this to see if it closes us out. And then we're going to have a little look at what are the size, what's the size? The whole of 9 and 9, 18, so 90, 85 pips or so. Where are we? 80. What I'm looking for here is the impulsive move where we'd have to put our trade in for 85 pips, which would be down about here, should the market stop us out. But I thought we were sufficiently above. We were from where we were down here. We had a 49 pip impulsive move down, measured from where we were down here, which should have been enough. So we either get stopped straight away or we don't. And if we do, then we're going to use, I'm just going to have a look and see how that looks. We need our stops above the C-ball. And yeah, so if we do get stopped in, then we're going to go in at 46,611. And what we will do, we'll do what's called walking the dog. We're going to walk up and follow any flat bottoms. All right, yeah. Yeah, markets definitely respect pivots. Absolutely key. So Wilson project system I've been using is based on Bollinger Bands, no problem whatsoever. It's all about volatility and imbalances on a particular time frame, and that's fine. No problem at all. The one thing I will say, guys, is I've got systems I use. Everyone's got systems they use. There's thousands of ways to trade right. What you got to do is find the systems that match your personality and what you like. And then once you've got those systems or strategies, then it's a matter of just religiously applying them. They don't win all the time. The worst we've had on the Dow, I think, is 2 losses on the bounce, and the best we've had is 16 wins on the bounce. So quite a high probability trade. And when the trade's usually a fast trade, and it's out of the trap, as we call it. We're going to walk this up now into R1, and we're going to, at 46, 44, we're going to have an 85 and 85 there. And then we're going to be patient, and we're going to wait for the market to see if it actually breaks out of the Bollinger Band. And then we're going to take this all the way down to the close here. So we've been stopped out. We don't need this one anymore. So we've been stopped out. We're looking for an 85 pip stop, which is around the futures here. If you wanted to, you could put a really cheeky trade in and just put a very small amount right on a bounce on the C-ball. So 160 pips. I'll demonstrate this to you to show what we do sometimes in the room. We can get away with an ATR stop of 50 on this. Oh, flipping it. Well, I'm sorry. It's the time has passed. Did anyone in the room manage to do it? I'm trying to explain things to people, and that bounce there, it's already moved 25 points. Pin in the ass. But I like to try and explain things and trade at the same time. So what I would have done is put a trade in on a C-ball bounce, and then have the market come all the way down there. So we'd had a 50 pip risk with 160 pip reward. If the market does come up to here again, then what we can do, we just put a really cheeky one in, 1/3 of a percent, and we just have a C-ball bounce. Let's see if sometimes we can get a double tap for a reversal. Sometimes it's already been up here once. Will it come up again? If it does, then we've got an ATR stop up here. We've got more than an ATR stop up there. It's nearly a 30% ATR stop. So we're looking at closing out this gap here. Let's go and have a look at what's happened in the market everywhere else while the market's been running, and we can calm things down a little bit. 36. So we've had that reversal here. We had 2%. We took 1% before the market, 1% risk off. We did a stop to entry for this being free. And now what we need to look at now, we've got the observations we've got. We do have the daily high here, which is irrelevant in closing the gap at the moment. It's only relevant if it's under the current price, because that would be an extreme gap. There's a 2-day gap, 2-day high, and that's absolutely fine. We've got the closing gap, absolutely fine. So that pivot is not a pivot risk. The pivot risk is a daily pivot. Now, if the pivot was in front of the close, which was a real pain in the butt this morning, we were trading, market bouncing around. And that was for the DAX, I think. We'll go and have a look in a minute. But the daily pivot is under the close, and so all the pivot traders will be trying to push it down to try and get in what we perceive as value as the daily pivot. So here we're coming up towards Camarilla breakout long as well. So we have got the market bullish and the price action is bullish, and we've got a 926 cross, guys, setting up here. One thing I would say, Stuart, yeah, great that you're using them, because then the fog and the mist lifts, you know where the market's going to react from, where it's going to bounce and everything else. Wilson, yeah, great. Bollinger Bands, great. Bollinger Bands are really, really good form of trading, based really around Bollinger, but very close to kind of VWAP, but they work very effective. But if your Bollinger Bands actually hit extremes, or don't quite hit extremes for the trade, either reversals, and it's in a C-ball, and you won't understand why it didn't actually get there. But if you connected it with C-ball, then you would understand why it's actually done it. All I would say is try pivots. You won't find any professional trader that does not use them. Right. So we're now on C-ball. We now want to do what we call a drop trade. So this is the record high, and well, we could put our trade 7 pips here with a wow. Right, okay, we'll have a 27, a 3% trade on this, 21. What we're going to do is we're going to, can I do a drop on here? Right under the close. I want to be able to, that might be just me just being a bit pedantic, wanting my, there's a 21 right on the close. I'm going to put that in now. Still
Order rejected.
I won't say what I normally do. I'm going to hit the button here, guys. Hit the button here. That's what I'm going to do. If you're going to get in before me, get in before me. You can hit the button. We want to sell the close. Not sell the close. We want to sell Camarilla breakout long. Do I want to actually just smash the button when I see it, or do I want to do this? ATR 7 for the right. It's still at 30. It still requires 33. I'm just thinking whether we could just, at this all-time record high, give it some. It won't let me double tap that, will it? No.
Order rejected.
Right, I'm going to hit the button now. I'm just being pedantic. Hit the button, guys. Hit the button. Right, so we've got all-time record highs up here. And what we're saying is, out of the trap, we want to sell this. And the reason I'm keen to keep going on at this is we've got economic news in 20 minutes. What I'd like to be able to do is to be able to get into these markets and make ourselves risk-free. So we've got the ISM PMI, and that is in 19 minutes time. So the figures it was last time 52, estimating at 51.7. Expectation is markets a little bit weak. If we get a number less than the expected, it's weak. If we get the number that is exactly the same, it's weak, because it should be 52 or above for a market being, but anything over 50 is a market's point and it's going great. A reading below 50 generally indicates a weak economy and a weak market, and also a weak US dollar, which is already weak. So that brings us on to our Forex trade that we need to be risk-free on. That I've not actually looked at to see where we are. So we're trading USD Japani, as I call it, USD yen. So we're looking for, we are base this on this trade, as well as the gap. People's need to be risk-free when they come out of the trade. When the economic announcement, you don't want to spike. So we've got 7 pip risk. You could take for people in my room, if you want to, you see 7 pips before, take it off, or take half off and put stop to entry. Because if the market does go in the favor, if it's all down and down, the market will rush down to the close anyway. But nevertheless, even if we're 3-4 pips up, if we are up, then we'll do a stop to entry, or just take the money and watch what happens with the news release on the PMI. So we just want to be careful there. We've got a bit of time. I'm going to put some alerts a bit further down. So just under 8 pips here, I'll put an alert there. And if we do hear that alert go off, then we need a stop to entry. Just see what's happening with the Dow. So we're on the Dow with our 0.3. We've been stopped out, so we're going to leave the Dow alone. It's just going a bit crazy, the Dow. We'll leave the Dow alone. It can be a real beast. You got to be patient with the Dow. We will get that gap close. And that is a racing certainty today. That gap will close. It's where do we get in to get that gap close? Let's go and have a look at the USD Japani. I don't know where we are with that. Right, USD Japani. Well, I'll tell you what we'll do. We'll take one of them off, bank your money now, and we'll move this one stop to entry also. So that's now completely risk-free. If ISM PMI comes in weak, then of course this weak dollar will exasperate the market, and it will just accelerate down. Targets we've had in yesterday, we hit the targets yesterday, very nice indeed. That was great. The other thing I wanted to look at was crude, and we're in crude as well. Where are we crude? Well, crude's we're in twice on crude at 0.5% each time. Now we really do want to see this come down. We've got 1% risk in total. We hit the targets yesterday, plus this extended targets of $60.44. I'm really looking for $60.40 or 4, should say $60.004. The reason it's 004 is because of 3 pip spread, and we want to be out just before everybody else comes out of that market. And we'll see what happens there. Let's just have a look at gold, because we've got 5 minutes to the 3 o'clock, isn't it, the news? Yeah, quarter of an hour to the news. So let's just have a little look at what's happening with the gold trades. All right, so hit our target for 2% on gold up here, which was very nice indeed. And the robots are risk-free as well. So yeah. So that was the trade that we did, just to remind people. It was a break of the fractals, and we were off for 15 points and 15 points. So that's another 2% in the pocket. And we're going for a bit of a monster trade on here for gold. And oh, my long trade hit full target as well. So what was that? With too many goals in. It's great when you just check which one made the most money. Gold spot. Gold spot, 30 points. Yeah, the version 2.3. If you're running 2.3, guys, 30 points. Anyone running version 2.3 at the moment?
Yeah, I've got it.
Great. And then my long trade come on at 12.15 at 31 points. Great. Can't complain. Right. Okay. So again, we're waiting for the news. So come on, 15-minute bar, great bar. You could have took that, stop on the swing low. Fantastic 15-minute bars. If you feel that the train's left the station on gold at the moment, 5-minute fractal. All right, yeah. Hi, Pam. Nice to see you here. Keep trucking. Oh, sorry. This is early doors this morning. We've been hammering gold all day, and from early doors this morning, been trading in and out, in and out, in and out. So fractals. There is a 5-minute fracker here, as you can see, a fractal breakout, but everything now is an all-time record high to hit, and it's all about PMI figures, and we need to wait for those in 12 minutes time, because we will probably, I'm not sure whether we'll get anything, any move to any extent in gold. USD Japani, yeah, that'll probably, if it's a bad number, it'll just exasperate USD Japani, and that'll go to the floor. But we can only wait and see. USD Japan is a stop to entry anyway, to make it completely safe. We took half off and put our stops to entry. So we'll see what happens there. Do you know what? I'm just thinking I'm going to take this off the table, guys. So this is fracker win. I'm going to turn my fracker off because we're so close to that target now. I'm going to move on gold. I'm going to move the stop, hit the tab, and it'll turn it into a normal trade. Now I'm going to move my stop really high here and lock in a whole bunch of rupees. There is the bottom fractal potentially going to come in here on a 5 minute. So what we're doing is, rather than taking everything off the table, we could take 1% off, bank that, keep 1% on, and let that run. We'll either get stopped out. Was 20. What's the stop on this? I can't remember. Let's have a quick look on the fracker max. Just stop that now. Just have a quick look at the strategy on the cord. 28 is the stop. Right. Okay. So we're looking for a better than, what are we looking for there? On that particular, with so many bots, you see, we're not really sure which ones are running what risk pro. We know the risk profile, we just don't know the points. So it will be 34. 1.2%. It's 1 to 1.2 at the moment. That's running just under 0.82%. So if we get stopped out, we've made 1.82, and yeah, USD. Right, 8 minutes to go. I'm just looking at the other screens. We've got the S&P in a short position at the moment, and that's just in the money, and it's bouncing around. We've got BTC into the money. We've got USD Japani in the money with a stop to entry. What we're looking for is some bad news to reaffirm gold going back to the top side, and US Japani coming down. That's what we're looking for. And we're looking for crude to come down the same. So where are we? Got 8 minutes to go. I'll put it on the screen when we're ready to go. Let's just have a look at the previous. Once this news is out there, I'll show you the daily edge and how it all works, and what we forecasted from. I start writing it at 5:30 in the morning and finish the analysis, then post it out to everyone that's got a subscription outside of my room, and everyone in my room get it to them before 7:30 with all the daily analysis and targets and the like. DAX, 7 minutes to go, so I've got plenty of time. Oh, that's a shame on the DAX, wasn't it? It come rattling off. That was it. Rattle up and come down, and eventually close the gap. Nice gap close. FTSE targets for the day. We're closing the gap, which obviously closed at 8 o'clock. Oh no, right, now this was a problem on the FTSE. Right. What I'm going to do, guys, is anyone interested in joining me in the room at 4 o'clock? This is a classic FTSE fade into the fill in the close. This is the way that usually sets up for a rocketing short trade, even on an uptrend. Is anyone interested in shorting the FTSE? I won't go live if you don't want me to, but I will be trading it myself.
Yeah, I'll go for it.
Yeah, I'd be interested.
Got a few nods. Right, okay, yep, fair
Yeah,
enough.
I'll have a
Yeah,
look.
I'll be on at 5. Thumbs up, that's it, great. We will be on at 5 to 4 then, and we will tear a new one in the FTSE. What I meant by that is when the market comes down in the morning here, if I explained before with the S&P, how long have we got? 6 minutes. There was no risk for the S&P for the market to actually come down, because no pivot risk, because the daily pivot was under the close and we're trying to come down to close that gap. However, the FTSE had the daily pivot in play. And there are so many on the FTSE, so many daily pivot traders that buy the pivot every single day. Doesn't matter if you don't know where the pivots are, it doesn't mean nothing to you, but this regularly comes down. I might have to do a replay on pivots just to and get the action running, just to demonstrate to people just how good these pivots are. Really, if you had no strategy apart from pivot trading, you'd probably do a lot better than using bullies, because these are actual turning points in the market that are really defined, and the big money runs around that. So you can see the market came down, bang off the pivot. You can see here where we had the rejection wick, where the market went up, took profit on Camarilla breakout long, then carried out and hit my target here with a wick there. That target again was a Fibonacci target. If the pivot holds, then we had 9501 as a tongue-in-cheek stretch. Didn't quite get there. Who cares? We smashed it and made a really nice trade here. Now, we don't go long here. We don't go short here, because it's not a cash hours, cash gap trade yet. That happened at 8 o'clock. This is the American first hour, which is volatile. Now, we are trading above Camera breakout long, so we are not going to trade this short unless at 4 o'clock you see a 5-minute Aikanashi negative bar under the 9 EMA, then be all over that all the way down to close. All over it. So for the moment, it can do what it wants. We'll leave this beast alone. We've took money out of it. What we will do is we'll put an alert just above C-ball in case the market starts to come down after 3. So we've got 3 minutes to go on the ISM manufacturing. It'd be quite interesting to see how the Dow responds to that. Wow, look at that. Look at that impulsive move. So so that's a 254-point move. I don't want to trade under here again. We tried a third. I'm going to do a half just in case this market moves very, very quickly. And I'm going to the ATR's 50. I'm going to still keep it at 50, and I'm going to try under that Camera breakout long again. Now we're going to hit the cancel button if it's strong news. Let's put this up here on the news, and we can get ready to hit the cancel button here. And we want to see. The thing that we are interested in is the month-by-month PMI. The ISM stands for Institute of Supply Management, and the PMI is, well, this is the number that we are really interested in. Global Composite PMI, hardly anything, but people are hanging on to the slightest glimmer of hope. 245, it didn't do what it said. It's gone a bit higher. It would be highly surprising. I wouldn't say manipulated because we're on YouTube. Highly surprising if we get a better number than 52. This will, if we do get a strong number, over 50 is strong. But if we do get a strong number here, it won't surprise me if the market just carries on up. If it's weak, then this is the overriding month-by-month services PMI, which we're quite interested in for a strong market move. So we're waiting for the numbers. If it's a nice weak move, then we'll be looking at the market coming off. We shortened USD on US 500. We're looking for some weakness. USD Japani has stopped entry, no loss, no profit. We've took some money before this happened. 50, right. That's a nice number because that will mean the market is going to come off. People are going to walk away and go, shit, if I can say that on YouTube. So the markets will come off now once all this is settled and understood. It was 52. It was scheduled to come down to 51.7 and come in at 50. 50 is a pivot balance on whether the services stroke manufacturing is positive in the US or negative, and this is showing a weakness in the dollar. We might have to go back into the US Japanese yen now. We took profit and then we had a stop to entry, and now we want to see this spike down. There it goes, boom. So it's doing exactly what we think it should do. This was not received very well at all, and it's got a triple tap reversal on there. So this is the targets yesterday. We will be going for these targets again. I don't know if anyone in the room might be interested. I know we've been tearing new ones in gold and making a lot more money in gold, but I'm going to put an alert here. I'm going to put an alert down here. So we know the implications of this data is even a weaker dollar. So we should have seen a dollar spike down. So if we do an overlay on the dollar basket, the Dixie, we will see, shouldn't keep making, yeah, great. We will see it flapping down, coming down. There we are. It's just a mirror. We've got the dollar basket against 7 major currencies. And one of the currencies is the Japanese yen, 13% the dollar basket. Constituent part is measured against the yen. So when the dollar's weak, we'll get strength into the yen and it will come off. So this market is going to come off. That's impulsive wave. That is a oh shit moment. And then a bounce back because there always is the hero that wants to go against the trend. And those are the ones that usually sat in a string vest at the end of the day, having wondered why it got ripped off the back. So what we're going to do, we'll be patient and we'll wait on what's happening in there. We also should see crude starting to blend and come down again on that news. I should check this if I open my mouth. Yes, it's coming down. There we go. Starting to go into profit, and we should not have seen much impact to the momentum on gold. Maybe come down a wee bit. I don't know. It's right near. There we go. So, so gold stopped out that profit on the bots. So we just took 21.36 out of. Oh, what happened there? Right. The bot, we just took 23.1% pips out of gold, and we pushed this up for 18 more pips. Was it 18 more? Right. No, we took 18 on the bot. Was it 18 on the bot, guys? You've got the bots on, some of the guys in the room. What?
I converted mine to a manual trade and I was out a bit
Took the
earlier on.
cash, right?
Yeah.
We're so close to this double tap up the bot up here. What would be really, really nice to happen is for this market to come right up to me 38.93, shy away, come all the way down, and then wallop right through it later on tonight. But you know, we just made 21 pips, another 18 pips on gold, and that's 17, 18, 19. So that's 19 trades and 17 wins out of 19. Yeah, so that's not bad. Another little trick. It's not a trick, it's a trade. So while we're on a 15-minute, I'm going to show you, even if we don't do it again, that's another 2%, 6%, 7, 8, 6, 7, 8. That's 10% nearly. No. I put stop to entry on that, so it's 9.9 point something percent we've made. Even so, pretty good. A trick on the Fibos on here, because gold is really traded extensively on Fibos, so you can.
Alert triggered.
Oh God, the bloody bots have gone in again. Right, so sorry about that, guys. I'll turn the bots off a minute so that you can't see them working. They're just relentless, these bots. They're brilliant. I think, how much are they up this year? Must be over 90% this year. They're up, must be. I can run that back, test it, run it back to show you if you're interested. But first time here. You're so chill. Good to be here. Hi. I'm not even going to pronounce the wonder why. Welcome. A really odd trading room here. It's one that actually trades real money. It's a real trading room. And yeah, anyway, right. This is a great strategy. This is all recorded on live stream. So take notes when I'm showing you this trade. And also you can replay it as well. That would be great. Also, what it would be really, really nice, my first stream also. Oh, great, Wilson. Great, thank you. Thanks for coming on here. How did you find me? For the first time ever, this is quite interesting. Before I go into this, I decided to do some promotion for the website. I've got the Google Ads guy going all over me, saying spend some money, your channel's okay, it should do really well if people know who you are. I thought, oh God, okay. So he set me up on something called a PMAX trade. So for the first time ever, HARKO Day Trading. So I'm not sure, to be honest, somehow got a promo in mail. Oh, it might be if you've been a prop fund trader, it might be because of that. So the promo it did for me, it started 2 days ago, is it put me on 6 different platforms, all focused back onto YouTube, and it identified 4 or 5 of that would make sense. Yeah. Okay. Great. Yeah. Okay. Yeah. Great. Oh, it's great that you're here. And what it's doing is advertising. Here's something. I'll see how well it does. Last of the big spenders. I told them I'd give him £10 a day to do it. Because I'm not a YouTube influencer. I'm looking for millions and millions of subscribers to earn money on the back of people and advertising. I'm here to teach people how to trade. If I can help someone along the way somewhere in YouTube, then that is great. And if I have helped someone, that's fantastic. My main focus is in my trading room with my guys, that anyone can come and join it, by the way, in my guys, to hopefully help them all become financially free or make even more money than they've got already. That's what it's all about. Right, so I'm going to show you this little technique. So you want to be on a Fibonacci, you want to do it on a 15-minute chart, and you want to do a full Fibbo. You want to mark in a 78.6 Fibbo. That's down here. There. And you can do a 61.8 as well, because if you look at this at the moment, that 61.8 is right on the secondary and tertiary resistance line for the pullback. So you're right at this confluence here. Again, I will, you can draw the confluence box, guys. There, that's happened again. Burst to the top. So 61.8 and 78.6. The 50% line we're going to draw in, which is here, and that's not a Fibonacci, it's just a 50% retrace. Now, this trade doesn't happen all the time. The trick is we're going to put an order at the 78.6 to buy at a 1% risk profile, and the profile is a target of 50 from a 78 with an equidistant stop, which is always under the full retrace level here. So that will be an order to buy here, and a target will be, well, call it 10. So we'll put an order in here at 10. And if it doesn't trigger, then it just doesn't trigger. It's just a technique we've got to trade. When we go down, I always put, you have to ignore what I'm doing a lot of the times. I always say risk 1%, you can. On gold, it's the only asset that I do this. I risk, depending on how the trade looks, between 2 and 5% a trade. The hit rate on this is, oh, we're on YouTube, so, well, I don't have to convince anyone on YouTube. Guys in the room know our hit rate's over 85 to 87% all the time. Oh, I'm going short there. We're talking, haven't I? Right, I'll stop talking. Let me do it. The hit rate, we have a fantastic hit rate on gold. Unbelievable hit rate on gold. Well, it's not unbelievable. It's just the strategies that we use. So we're looking at the 10-10 there. So what we're looking at is, from a risk reward point of view, is the market going in here and crashing out here. Now,
Steve, you've gone short again.
oh bollocks. It's a good job someone's watching. Who's that? Was that Rory or Simon?
Simon,
Cheers, Simon.
you can pay me later.
That's all right. I was going to tell you my favorite whiskey brand for Christmas for all the gold coins you've been collecting. Right, so a one-to-one risk reward here. So we're looking at the market coming down. If we get it, great. If we don't, then we don't really care because it's just a strategy that we have. Observations. Markets usually, when they've had an impulsive run here, get a 50% retrace. If they get stopped at 38.2, it means the market is very bullish. And if the dip only goes to a 23.6, here is just look, I found you. Great, we'll carry on being lucky, wonder why.
Steve, you've got both orders in now. You're going long and short.
Oh, bugger. Right there, you can see this is not a well produced. It's a real trading room, getting told off by my students, not students, colleagues that I trade with. So I've often gone the wrong direction. I've talked one direction and gone the other quite a few, and then someone said, "Well, why you do that? What have you done that for?" I think, blooming heck. So anyway. If it's 23.6, this is an absolute rah-rah on the market coming down. But this, so you can see this move here. This move, let's measure this move. And one thing we want to be looking at here is 50% should be a given on a big move. 61.8%. All the Fibbo boys will start salivating because we're wanting to buy this. And then at 78.6, they won't be able to help themselves and they'll buy. Unless the bears are in and think that we've had enough here, and they will try a double tap at the bottom. And it will go just below the bottom here at 8.3, maybe 8.351 or so. It's a 0.3 spread, just to knock people out on a tight one here. Because that's what happens day in, day out. People seem to forget, like people seem to be like moths when they trade. They see something and never remember what it's all about. Right, so what we're going to do here, we can measure this impulsive wave. I talked about impulsive waves and average true ranges. That's a big impulsive wave. And that happened in 2 hours. I'm going to see if this is normal. And the way we look at this to see if it's normal is we'll put our ATR tool into a 1 hour. And we'll have a look to see how big of an impulsive wave that might be. At the top end, we're looking at roughly 20 odd pips. This was a big wave then going up. That means we'll have a deep retrace as well. So we might get clicked in. We may get clicked into this. Looking at the orders at the 1 hour, you can see the orders coming down. Participation is going up on the average true range. It is going up, and it's going up to the downside, indicated by the unbalanced volume. But on balance, on the 1 hour, this market is still bullish, and you can see it's still bullish because it's above the 200 EMA. If this closes here, it's bearish on price action. These are the things you always got to remember. Price action can be bearish in a bull market. The key is to make sure that if you're in a bull market and you're going to want to trade with a trend, which is a really good idea to do, is wait for the price action to return back to bullish. In other words, markets bullish, price action negative, turnaround, 15-minute bar, boom, straight up. Or you can use a fracker here if you wish. So we're looking at this. Is that close to a 4 hour move? We're going to use 1 and 4 hours to find out how big a range this is. So this is an extraordinary move out on the American market. So this is over a 2 hour period, and it's a 36 pip move, which is uncharacteristic for the past few days. Uncharacteristic. So when things are uncharacteristic, they do tend to have a good retrace. And what you will see here, if we go into the detail now, you will see the buys on the 61.8. Because that'll, if it does happen like that, you'll see. So there you are. There's an absolute demonstration that the Fibonacci boys were salivating at 61.8 and they put their orders in. Right, this is a OBV. You want to see this OBV9. This is an indicator I have developed for TradingView and for Pro Real Time. It tells you what's happening in the market based on an on-balance volume measurement with a data point being the 9 EMA. So while you are trading above the 9 EMA on any time frame, on balance, the market is bullish. In other words, the volume is to the bullish side. And if it's below the 9 EMA, it's negative, and it gives you a little heads up before things actually happen. Really good indicator. And by the just for the settings and things, just to let you know some of the settings, if you've not been here before, some of the settings, we've got the ATR set to 5. Do not set to 14 or 10 unless you're a swing trader. If you're trading price action at 15 minutes, why do you want a 2-week smooth or 10 days smooth? Maybe you just want to know what happens within the actual week's news. It'd be a much better taste and feel for what's happening in the market, because the pulse you're looking at is generally under 1 hour. It's down into 15 minutes. So if you're working in hour, 15 minutes and 5, then a 5-day smoothing is certainly is enough. So do not have your standard ATRs usually set around about 14. Get all of it, throw it in a bin, set it to 5 if you're a day trader. It will change the way you trade. On balance volume, really on balance volume. If you're trading on 10 minutes, OBV needs to be 5. If you're trading on 15, do it to 10. If you're trading on an hour, set it to 15. You want a little heads up on what's going on. So you can see here on the Icon we have got the well, we've got the bull starting to get interested in here. The people were bought in here. Now we've got a bull bear fight here. Are we interested in this? Not really. It'd be nice if it come down a bit further and just tagged us in. But great strategy. Buy the 78.6. You can buy the 61.8 if you want to be in the trade a lot longer. And if you want to be in a trade a lot longer, then your stop needs to be on gold. Your stop will need to be 3 pips below the swing low, 2 pips at least, maybe 3. So if you wanted to buy that, make notes of this, or just watch the video afterwards. If you're on the 61.8 here, then your stop needs to be under here. So we're talking that's 50 so around about 51, 52. Well, where this is would be ideal. So that's 16 pips, and then you want to find out where that 16 pips might take you. The target I would have liked to seen today, and we're miles away from that at the moment, is all the way up here. 16 pips. Well, if you're using a futures contract, then you can put your 16 pips in and have that hold it over the weekend. 16 pips. Can you get 16 pips in here to the target? Well, hell yes. So that's a 1-to-1 risk reward. You could have hit the button at 16 pip stop, 16 pip target, and possibly get the opportunity for a 1-to-1 risk reward off that 61.8. All different styles and techniques. All of them are really, really good. You will see here as well that will be a bolly exhaustion probably. I'll show you. We've got a bolly trader. I used to teach a lot of bolly trading, lots of it, but it's I've got a standard bolly set up here. I've not put on the right one, sorry. Boom, 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 boom. Oh, I'm doing it wrong again. I'm on version 12 and not really conversant with exactly version 12. Add indicator up there, that'll be the one. Why isn't it going up here? I'll get rid of it. That's finger trouble with me, not knowing how to do it. Can I add it into here? Configure, 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 add to the list. Don't know. When I work out how to use the soft, I usually use version 11. Version 12 seems to be a little bit beyond my comprehension just at the moment. So that adds, I usually have everything already. Right, let's have a little look. That's why can't I put the bolly up? Boom, 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 boom. We'll try one more time. Compare instrument. Add an indicator.
Steve, are you pushing bandwidth rather than bands?
Is that what I was pressing?
Yeah.
Oh dear, right. Okay, it's good job someone's watching, isn't it? Yeah, I'm not interested in bandwidth deviation. You can actually see that quite easily. You don't need a Muppet indicator to tell you. Ah, bands. Yeah. There we are. So there's a body band with a standard deviation of one each side, and then you got an over extreme here outside. So we used to teach this quite a lot, and it was really two ways of doing this. Very quickly, two ways of doing this is when the market is on an extreme, you wait to break back in the volley and return back to the mean, or if you can, extend it to the bottom, or you do an ATR trade. So on 5 minutes, you would look at the ATR on 5 minutes, donk, and it'd be a 7 pip. So what you're looking for is 7 pips outside, a deviation of 7 pips outside, a 15% ATR. No, right, what is 15% of that? 1.5 pips. As soon as it went 1.5 pips up, you would on this, you would sell the market back to the top of the bolly, or buy outside of that, but it doesn't really give you it. Nowhere near as effective as using, I can actually 15-minute bar reversals or 5-minute bar reversals. And if you are using cash markets, then it is effective, but for every, I would say for every one bolly opportunities you get, because it's a good way of trading, you probably get 3 or 4 opportunities from using 15-minute bars or fractals. They are that good. Right. So we're just waiting here. Ideally, it'll be a 15-minute bar or this 78.6. We've got an order, and if it comes down, we're overcooked. For gold on the stock settings are 15.55 for gold. Same for crude oil as well. For the indices, it's 1555. For Forex, it's 833. The reason it's a much tighter width, in other words, 8 days smooth by 3, is because you are battling one currency against the other. With crude oil, it's one asset flowing, and with the indices, you got on the S&P over 500 different asset classes in the index. So you want to have a smoothed out view. 1555 is the best we've found over the years in trading. So bots in, trades in, 15-minute bar or 5. I would tend to look at this now. We've got a flat top here, and the market run up, an extreme move, really fast move. So when you get that fast move, the market's going to come down pretty sharpish as well. 5-minute fractals will probably be the order of the day, looking at what's happening with this structure. And we can, one other thing as well, when we're using, while I remember another tip, using Fibonacci's. When using fibs, a lot of people just got swing high, swing low, blah, blah. And if you've got normal candles, there's nothing else you can do. If you're using Heikinashi, which we are, always ignore one Heikinashi candle. If it's a different color, ignore it. It doesn't mean anything. If you get two together, then it starts to mean something, but one doesn't matter. So the swing low is here, not there. If normal candles, it would tell you it was here, but it's not. It's here. These are the lows here. So we can do a Fibonacci. We can do an extension. Whatever, that's 5 minutes. 5 minutes, pretty rapid this. But this is a 15-minute, this is a 5. So let's just have a look at this 5. If I can get the expansion tool rather than the retrace tool, we'll go for the impulsive wave there, down to this impulsive wave. And the next impulsive move would give us a 78.6 up here and a 100% impulsive move. Another phase wave would be here, 3896. So that would give us an easy collision into our 83.93 target. So what we could do, and everyone that's watching this is to people outside of my room. God, people outside my room are all disappearing. You make too much money in the room. That's why you bugger off, because you're not hungry to trade. Sorry, I'll stop showing. Yeah, there's nothing wrong with making money. It's nothing wrong with making money in the market. It's great. I just get a bit. My view: never ever fear losing money. The fear is always never making enough, never making or taking advantage of the market when you can. Don't give a stuff if the trade loses. No fear in that whatsoever, because we use strategies that work 70% plus all the time. So if it loses, it's just a statistic. You can't win all the time. But when you get great setups like this coming up, it's just crazy not to absolutely hammer it. But then if you sat on 3, 4, 5% profit for the day, no reason why really you shouldn't fill your pockets full of gold and go home. I just get a little bit keen. And the guys in the room know I rant anyway, so it's all right. It's a Friday. Right, I'm going to write these names down of who's in the room, and then at 4 o'clock, when they try and come skulking back in for more rupees, I might ban them out the room. We've got our American Scouser, Tick, Becky. What I can't understand is where's Bridget? She keeps putting notes in all the time, and Andy. The other, yeah, never mind. And Terry skulking around the edges is where is Terry. I don't know where Terry is. Terry on YouTube? I don't know. You can't see people on YouTube. Anyway, sorry about. I'm looking at the screen. I can see the studio on. This is the camera. Sorry. Right. I'll stop waffling. So we have a target here, and because this is recorded, you can tell me later whether I got it right or wrong. I'll know personally, of course. Let's get rid of this mess. Delete. And get rid of this. Bit of a shame, really. 61.8 was a reasonable buy for 16 pips, but we're already in anywhere, and we've already traded this lots of times. So we've got a 5-minute fractal to have a go at. So you'll see a fractal line in there when I turn it on. Donk. Oh no, it hasn't. It's not no, because we've got high. Right, okay. So this potentially, what we need here, we need this market. Where's my pen? Get a yellow pen out here. Where's the magic marker? There. What we need really is this market to run up. This point here, high point, needs to come back and put in a new low. And that what will happen there is that will cause a fractal to happen. And then we'll take a break of that fractal to go up into here. At the moment, they consider fractal size. The fractal is, wow, it's huge, isn't it? Absolutely huge. So maybe a 15-minute bar. What we're looking at all the time is structure, structure, structure. The other trading, of course, the guys in the room will know this, and I will do a video on this. I keep saying I'm going to do the videos, but I will do the videos. I'll do them maybe after here. What we'll do is, hello?
Are you busy?
Yeah, I'm streaming live at the moment.
2 seconds. Are you?
No, we're streaming live and recording. I've got someone in front of me saying, Emma, weight training, you mean? Tonight, why? Is there something on that I shouldn't be? Or Marie? Yeah, no, I won't be weight training then, no.
You know.
Yeah, okay, great. Sorry. With people, oh wait, sorry, it's a 5-minute chart, right? Okay, are you planning to buy at this 15-minute bar? I will at the 15-minute bar. Someone's just come at the office, no walking up and down going. In other words, am I going to the gym tonight? And because apparently we're going out, and so I'm not going to the gym. Right, okay. Right, so 15, there's a fractal about to show here. Can you see the way it's come down? If this doesn't break here, then that will produce a fractal. That'll produce a 5-minute fractal. If we can see if I got off my trend then, didn't I? Right, so here's a fractal, not fractal. Here is a 15-minute bar. I'm going to turn these fractals off a minute. Here is is that another? The robots. Yeah, they're robots. You can see the robots because they've got gear wheels on them. If we get a 15-minute bar here, then we probably could take that when we have to watch out at these levels here. And you can see we're now trading with the trend. That one was below the price action. That was the trend is here. Price action is now potentially positive. On the 5-minute it is. Now on the 5-minute, what you can actually do, another little technique, this is a video that I'll actually do, is what you're looking for is the trend. We know the trend is bullish for gold. We're looking for a candle to close above the 9 EMA, like so. Then we take a break of the top of the candle with a stop under the swing low here, just because you need a stop 1-to-1 risk reward. And then you're in the market either for your 1-to-1 risk reward or you are tracking this 9 EMA. This has got to be Icanashi candles, has to be. It won't work with normal candles. So you've got the 9 EMA and the price action is telling you it's had enough here. And then these wicks do not count. It's got to be a close under the 9 EMA, and then here, there's your close. There is a close there. So if you are trading that 5-minute technique, you are in on this one, would have been here. Obviously, the market will give you the opportunity for 26 pips. If you 1-to-1 or 1-to-2, whatever you set, hit within that range, then you would have took it. Or you come out there at 13 pips. Still not too bad, because your stop would have been under this swing low around about 5 pips. So you would have made nearly a 1-to-3. And that is just a technique in a very bull market. It works on anything, any asset, any Forex, any index, works on them all. You've got to have a nerve of steel. In other words, you don't have any nerves. You've got to let the market tell you when it's had enough. So the market goes up and up and it's had enough and you get out. At the moment, the market looking really good here, but the trade is actually a break. So you never got triggered. Actually a break. So you never, that was under the 9 EMA, that's above it. That is a trigger point. And that is what keeps you safe. Right. We're now trading under 9 EMA, pain in the butt. I'd like to get some more live trades out, but we're going to call it a day and talk everyone to death. Let's just have a look at US 500 and Wall Street before we go, because those two need the gaps closing. And let's have a look. Now, if it hasn't happened now in the first hour, probably isn't going to happen for a little bit. Statistically, these will close out generally within the 4 hours of trading, but a really good time to trade the American markets. This is just using GMT, so you'd have to extrapolate that, is round about 7:30 to 8 o'clock, which is roughly when the traders get back to the desks after lunch and the market wakes up again. And that's usually where positions are put on. Volatility happens. And you only make money when the market moves. So, yeah, that's what it's all about. Let's just go and have a look at those before we go. Quickly look at the FTSE. All right, it's on my mind. This FTSE, we've had no alerts, have we? This should be coming off. Oh, that's looking good. So I'm going to put my alerts a bit further up. We want to catch a trade.
Alert triggered.
We want to catch a trade. It's the alert, sorry, it's a old alert, so it's a triggered when I've moved it. So we're gonna stick that here. I'm keen for this for the backside. Is that a technical term? The backside to fall out the market. Yeah. Right. Bear with a minute. For the prop traders, I'm running a trade locker on a different machine, and we're going to be running with probably Funder Pro, and they're going to give us a prop fund that I'm going to trade live and teach you guys how to trade a prop fund, how to win a prop fund, and the techniques of turning. Usually all prop fund challenges fail for all sorts of devious reasons, but I've got some tentative agreement for people in my room or trade with me on prop fund to have some larger tolerances and a change in server times to match GMT, which will make a huge difference, especially to the robots that we've got trading in. And quite exciting, really. So that'll be for prop fund traders, but unfortunately, most prop fund traders are sat gently steaming and smoking after being burnt. Usually not because of their fault, because of the way prop funds are generally managed. Even the big statistics that say, oh, 6% of all prop fund traders pass the challenge and actually make money. It's less than 1% really when you look at the real stats. So you got a 99 out of 100 chance of losing. We may be able to change that significantly. Right, I won't stop going on, but that's something we'll talk about next week. So, FTSE. The DAX should have been on a rah-rah today. It's a Friday feeling, and we may even get a rise. Will we get a rise? It's too late. This needs to happen round about GMT, round about 1 o'clock. And if it hasn't happened by 1, it's probably not going to happen. So leave the DAX alone. So I'm getting messages. We get messages in Slack and in WhatsApp about what we're doing. And I don't know whether the guys don't come on live in the room. We only have about quarter of the membership. There's only about a quarter that are, or 20% are on at any one time because of work commitments and everything, I guess. But then send messages. So right, US 500, and I forgot to do the tech. Didn't I? Look at that going up. We had an alert down here, so we're going to move that alert. But you can see the bad news. It's like, yeah, all the bad news on PMI. What the hell? We'll just buy long on getting new all-time record highs. It makes no sense at all, the market going up. But do you know what? The market's, no matter what you think, the market is always right. Even when it's wrong, it's always right. But what we're going to do is, yeah, we'll wait for the market to finish. Is there a BRN? Is there an R2 here? That's not really that helpful. Let's just do a little Fibbo here, see what the Fibbo, see the Fibbo boys, see what they're trying to achieve. I'll just do one on here. Right, we'll put a mark in the sand and check the markets after we're done. I'm just marking up where it's probably profit's going to be taken, where it's going to reverse. And it's good exercise to do this anyway, guys. Just keep doing it and checking, getting your Fibonacci skills polished. So we're going to have a little bit of that. We've loaned the US 500 some money and we want it back tonight. Dow, whoa, look at that run. $400 pips. Right. Yeah, guys. What trade do you think we should do? I'm asking you guys now, a test. We did I've just done some videos on it, and audio is all about that impulsive move. Anyone remember what it's called? No one dares.
I know it's around the 5-day ATR, but I can't remember
exactly.
what
It's exactly what it is.
Oh, is
Simon.
it called that? Okay.
It is called a 5-day ATR.
So there you go.
The 5-day ATR is
That's
325. Let's measure this correctly, and we put it is a system trade. So let's measure this absolutely correctly. This is that so we're going to measure this spot on. So let's take this to 5 minutes, and we want the 229 bar, which concludes at 2:30. 229. 229. So where is it? 229. Or the end of the 225, which is there. That's the open, and that's 413. So we missed a 5-day ATR. So what we'll actually do, we actually will put it on the 5-day ATR, and then we can check. So 325 is the entry. That's close enough. That's, oh God, I can't get it there. 320, just under there. And the ATR is 98. So if you want to just do 0.5% and have a practice on that, you can do that. And you're going to do a 98 pip stop and a 98 pip target. And it will effectively be one of our drop trades, because there's a 5-day ATR. I'm going to put that in. And I'm going to put a stop in. That's a 5-day ATR, just to see if that would have worked. We're going to do a drop trade, and we should get that movement, but I think I'm going to put an alert at the 5-day ATR here, just for everyone's info there. And then I'm going to take that and I'm going to run it all the way down to the close. So we've got a 30% ATR stop for 1%, 0.5%. So the stop is 98 and the target is 398. So that is divided by 2, 0.5% risk with a 2.03% reward. I'll leave all that markups there and then we can look at that later. So that is the drop trade here. There. Where's my arrow? So wait for the market to go 5-day ATR, push up through, drop that in, and let's see what happens to that market. So we can give that a little tickle down. Right, let's have a look at that gold before we go. Is it doing anything yet? Not really. The bots are making a bit, bugging around, doing nothing. So really, the market is a bit of a bull-bear fight here, complete indecision. So what we're going to do is just going to wait for that indecision to abate itself. We can take this trade off now, and we can take this off now because we've got a new sequence. You can see the new sequence on 15 minutes. We've done our dip. If we want to see on a 15-minute where the next fib targets are going to be, there's the next fib targets on a 15-minute impulsive moves. So 78.6 is probably going to be no such thing as a given in trading, highly likely to actually happen. So all we're waiting for, it sounds easy, all you're waiting for is the market to give you that impulse to have the buyers coming back. Down in the 5 minutes, the buyers are having a go. You can see here they're having a little go. Out at the 15-minute, you can see this. They're certainly having a try. So long live the bulls. We've got 2 robots in there trading anyway. We want a 15-minute bar and a clean one. We are trading with the trend. Price action is bullish. And what's the saying? If this is a flat bottom and a full bar, it never gets any better than this. You got to pull the trigger. Doesn't look any better than this, but these are shit candles. These are 15-minute bar. There is a 15-minute bar guide actually. It'll be in the links on this video, and they're on my website anyway. And it's free. Just download it. It's free. And one thing I will say, if you go on to it, because there's videos in there that are now free for the subscribers, what people tend to do is they download something and unsubscribe, and then they never get any updates, and they never get the videos or the PowerPoints or anything else that goes with all these, because they've downloaded the guides and then they've unsubscribed. So if you get something free or anything and you unsubscribe, you'll never get an update, because updates are only for subscribers to my website. I don't know how many subscribers they are. Where's it? How many subscribers have we got? The more, how many subscribers, customers? And we've been going now for about 5 years. Come on, this is running slow. Customers over 5 years. It's having trouble counting, I think. 17,469. And then we've just got a guy here as well, Mr. Fowler from Calgary. Only gone and bought something and then unsubscribed. There's an update for it, so you'll never get it. And another guy from the States as well, Gary Schroeder, who downloaded the 15-minute bar and now won't get the video or anything else because he unsubscribed. And I'm not sure why. They come in. Ben Holdness as well. Got something and unsubscribed. Jay Jackson. They're all Americans that seem to come on, download the stuff and then unsubscribe. And then, yeah, another American as well, another American, yeah, I've had 6 guys this afternoon get the 15-minute bar, then unsubscribe. So as soon as you unsubscribe, you don't get any benefits. You just get the document rather than the videos and everything else. Bit odd, really. Don't understand why people do that. How many calls do you live? How many calls do you live each day? What do you mean, how many calls? Are you talking about options? Sorry, are you talking about options? How many trades a day do we do might be the question. Is since this morning, done 1, 2, 6, 22 trades today. Please see, you could please talk a little about what's included in the monthly membership. Oh, right. Yeah, I never do. Yeah, you have to forgive me. I'm not a salesman. I'm not interested in selling. If people want to join, then that's great to join. Did 20 trades today. We've been doing stop to entries. We've lost a few things, but overall made over 9% profit. What's in the monthly membership? Well, live trading every single day. Live trading access into the community. Once you're a monthly trader, you've got access to getting hold of the gold bots, and that's only access to for the guys that are members, either monthly or full. So as a monthly member, you do not get access to any other written guides. So this is just for full-blown members that want to become professional traders. And if you're a full member, you get a dedicated plus for your photos. No thanks. You get access to just over 1.5 terabytes of learning and trading material. Every single trade that we've done is from 2019 right through to 2025 is recorded every single day. Where are we up to at the moment? So we've got all that material that's recorded every day. So if you go into September, you'll see all the different, all the days. So you get access, right, for a monthly, you don't get access to any of that because as a monthly access is for people who already can trade or who want to practice the trading with me and my community. So literally you get the daily edge right. I mean, like videos. Oh yeah, you get them every single day. All the streams every single day. So for instance, was 5. We trade we trade live every single day, or stream as you call it, every single day, and then we had an extra 7 sessions. So that's at 5, 10, 12 times this week we've traded live. You don't have to come on them all. There's times when we're doing everything, and like today. I did say that we'll actually trade again at 4 o'clock. So if people want, I'm quite happy. Just let me know. Yeah, so live streams all the time. The on-balance volume indicators, the fractal tools, the daily pivots, the daily edge every day, which is, we call it the news channel. And that is this document that tells you running now for 3 months and it's lost 1 day in 3 months. And it's every single day. It gives you a brief on exactly what's going on, highlights, summaries, economic calendars, further reading and research, all the targets that we're going to go for, and then reports on how well that we actually did, as well as the recorded sessions, gold, crude, USD Japaning, and that we go to 160 different websites using AI technology, and yeah, you get access to all that. Approach and forfeit, yeah. So thank you for reminding me. Bloody hell, I've got the guys in YouTube reminding me, and the guys in my room are asleep. Right. Cheers, Wilson. We may as well stay alive, and we may as well stay alive and trade. May as well do. And we'll give the FTSE what's due. So basically, if you remember live, if you're a monthly member, then you get the daily edge all the time, the pivots all the time, fractal tools, pivot tools, filters. What else? Live streams, and me ranting on every single day, teaching you all the nuances of actually professional trading, because this is a real trading room. It's nothing polished, no big rah-rahs. Not going to sit on my Lambo or wherever I've got my toy Lambo, whatever. This is a real room for real people who want to really learn to trade. So live streams every single day in the room. Sometimes we go on YouTube once or twice a week, and just to learn everything. If you want to learn how to be a full-blown member, an offer that we're doing at the moment is, if you get a full-blown member, you get some fractal tool, the gold robots, that if you have, I think we calculated, if you had an account of probably 5K or more, it would pay for your whole membership by Christmas anyway. But that isn't the point. It's investing. If you're going to be a full-time member, you have to have at least 4 hours a week spare to put into the charts and to trade, to learn. Otherwise, you'll waste your money. So the membership's high enough to get rid of all the wannabes, and all the baseball cap wearers, wear the baseball caps the wrong way around and want to be a millionaire overnight. But if you want to be financially free in 3 to 5 years' time, then this is a room, that'll be the room for you, and it will teach you how to do that. But you get one-to-one mentoring sessions. Oh, look at that bar. Right, we need to have a quick look at the FTSE. We'll carry on with gold as well, because that 15-minute bar in 14 minutes might be the perfect storm. So we might get another 2% out of gold. Forget these robots are just unbelievable. They're really, really good. And I've got some ideas for the next generation next year, so they'll be even better. Yeah. So thanks for the chat. Sometimes I feel like I'm just on my own chatting to the abyss. And well, generally there's only me listens to me anyway, so it's quite normal. Yeah, there we go.
Steve, you're full of
Oh,
knowledge.
what?
We're just listening.
Who was that? Was that Paul?
Yeah, just saying, you're full of knowledge. We're all just captivated by all the insight you're giving us.
I need a new sound. Bullshit. My pearls of wisdom.
There you go.
You got to wait for me to stop ranting to get the odd nugget out. Oh dear. Thanks, guys. Right, go. We've got form. I'm going to set me. Where's my clock? My Mobi. I want to make sure the next 13 minutes that I don't miss it. That I don't miss the trade. We've got 13 minutes left. So in 11 minutes, I'll get my alarm going. So we don't miss this 15-minute bar, because this is a lovely 15-minute bar. Right, let's go and have a look at the FTSE and see if we can tear a new one in it. Yeah, so basically the monthly, you can come in and out 1 month, 2 months, what in 1 month, out the next month, do as much as you want. It's a shame, really. I did put an ad, but you're probably not on my email list. I did a thing for the email list that if people come in, then before the EOQ, it's probably the best month possible, end of September, because how much damage did we make on the EOQ? 13.2% on that 1 day alone. EOQ is an unbelievable trading day, and we recorded some of that session for YouTube as well. So I think it was called, what did we call it? The Power Hour versus EOQ. That's the last live. Have a look at that one, and you'll see live stuff being set, trades being made. We set a live gold for a 2% trade, and it smashed full target as well. That was really, really good. And it's quite nice because we got a lot of naysayers on YouTube saying it's all hindsight. None of it's hindsight. Everything we do is live. And we either fall on our sword or we go galloping in our pony over the hill with the saddlebags full of coins. Right, so what we're looking for here, this is 1603. The thing that we're looking out for, the perfect storm, is for the 1605 bar to go red. Since there are orders that are placed, let's get rid of all this now here. So we clear it all out. We don't need to, all those targets have been hit anyway, so we don't need to have them in anymore. Make this a bit clean. There we go. Obviously, the 95.01 stretch never quite got there, but I'm pretty keen to close that gap. Will it come down that far? Don't know. We'll see. The ATR today on the FTSE is 74 pips from the cash close. 74 pips. It's not run a 5-day ATR. It's getting close, but it hasn't run a 5-day ATR. 74 was right on that limit. That's a full 5-day ATR. It would have needed to get there. But what we're going to do is we're going to wait on 5 minutes. Sorry, I done 15. No one saw that. So we're waiting on 5 minutes. And what we're waiting for, and this is on a Friday when the market is above the close. This is what we're looking for. Even better when there's a closing gap as well. So we're looking for a 5-minute bar like that, or like that, under the 9 EMA. In other words, the market is trading negatively, even though the market is positive here. So the trend's up, price action down. At the moment, trend and price action are going hand in hand. We want to see. So the market closes at 4:30 here in the UK, but then it settles for 10 minutes. And what we sometimes observe, quite regularly in fact, is that the market looks like it's not coming off, but orders are put in at the close. So at the close, the cash market closes, and then you get into a period called a settling, where people have orders in to either buy the market or sell. Generally, we want a lot of people to cash in the longs, so they're taking risk off the table over the weekend. And then once that happens, because all longs are getting cashed in, it's releasing money back into the market comes off and comes down. And you can get up to 15 to 20 points into settling with the market coming down. And if you can get a nice risk reward, a stop around about 10 to 15 pips, you can get yourself a cheeky 1% up until 440. And if the American market at that time, this time, starts to come off as well, the Dow especially, because there's hard links into the Dow. The Dow at 4, if the Dow, excuse me, is coming down at 430 when the market closes, what you'll find is that it will drag the FTSE down even further out of cash hours. A quick look at the Dow. We clicked in the Dow and we're 21 points up. So the Dow looks like it is coming off. Well, on 15 minutes, it looks on there's the 5 minutes. And on that bar, we are we're trading on a negative price action. And this is negative price action. And if you can see, guys, in the room, we've got the first 2-ring low, the second 2-ring low starting to form, and we're trading under the 9. So quite interesting this. We need that to continue doing that. S&P. Well, S&P's flying away, isn't it? We're waiting for these alerts to be triggered. It's not trading negatively yet. Quick check on gold. One of the robots has it triggered a stop to entry? What happened with the robot there? History. Yeah, it closed itself out. It stopped to entry. They have risk management, some risk management code within them. Can I show you it? No, I'll keep on. I'll show you it while we're looking at the FTSE. Yeah. So if there's any hesitation that the bot doesn't like, it'll just take a small amount of profit, and it will shut itself off and wait for the next opportunity. So we'll just look in and back on the FTSE. I'll show you. So FTSE 5 minute. So this bar here should be a red bar, finishing at 5 past 4. This should be the red bar here. So it is looking red, but it's not a good red bar. So I'll show you the bots, what I mean by the stop to entry functions. Because when you're in the room, I quite open. My job is not to keep you with all the subscribers. For me, my job is to impart the knowledge that I've got, so you can all be consistent traders and profitable traders, and then you can teach me. Right, so bots. It was the Max series, wasn't it? So there we are. They both got. So if I show you the code, right. So bringing the code down a bit. Here we are. So we've got a function in here, which is stop to break even. So once on this particular bot, once the market has triggered 8 pips into the positive, in other words, the bullish trade, a bullish bottom, this is what this is. What it will do is, we've given it the trigger for 8. It's looking at a 23 pip stop, 32 pip target. As you know, the bots were ready just to run long. But as soon as they went to 8 pips in profit, it triggers that stop to entry. In other words, it says, do not close out with a loss, close out with a profit. And that routine then tells the robot to say, if the market's coming off, I don't like this, I'm going to grab some profit and get out and just sit there until the price action is working in the way that the robot likes. the way it's programmed to trade, and then it'll switch itself back on again, and it will trade the market again when you get the next impulsive wave. Once that gets to 8 pips, it goes, right, okay, I'm not going to lose any money again, and then it runs, and that's how they work. And they just sit there and they trade the market all the time, and they just keep ripping rupees out of the market. They go for 8, some of them go for 9 pip runs, some for 15 pip runs, some for 30 pip runs on different time frames, and they just rip a new one in gold. In gold, I think gold must be up at least 40% 42% now, must be. Let's have a quick look. So we've still got a bit of indecision here. We're still above the 9 EMA. We've just got to sit in our hands and be patient, because trades do come to you. They will do. One of the biggest thing, three things, and I think I put them on shorts. Don't like doing shorts. Don't like doing videos really. But 3 things for any successful trader. One, you've got to have a strategy you believe in, really believe in, and one that's tested, that works. That's our paramount importance. Second is you got to be totally emotionless and absolutely mechanical in executing it. When it sets up, there's no feelings involved. No, I don't like this, I don't like the other. You execute it. There's me alert to say, get back to the gold. You're emotionless. And then the most important thing, really, it's you need to choose your weapon, stop dancing around your handbag, and then wait for the best tune to come on and fire it. In other words, be patient. Got to wait. Be patient. Be patient. That's the hardest thing. People sit there and go, "Oh, well, it's good enough. I'll just trade." And then the market goes, doesn't go in your favor. You got to learn to be patient. Strategy. Don't dance around your handbag, and when the tune hits the floor, jump on it and start dancing. That's what it's all about. It's and no more complicated than that. They're the core principles for every consistent trader. Strategy, execution, and patience. Don't need anything else. Right, I'll shut up. Gold, where we should be a minute or two away from. There we are, 1 minute away. How's that bar looking? Not looking good, is it? So if you've not got a 15-minute bar entry guide, which is free, go and get it. Again, if you want to just have a dip your toe in and understand how markets actually work, have a little read, you can subscribe to the Daily Edge. It's a tenner a month, £2.50 a week, and it gives you 3 to 4 really good high probability trades. It even tells you when to get in, how to get in, and where to get out. I can't do anything much more other than trade for you. And I think people must be absolutely flipping mad if they haven't got the Daily Edge outside of the room. You get it free within the room. If you're a monthly trader, it's free as well, of course. But why people don't use it, I don't know. I guess to the extent that I get so frustrated, I think, oh, sod you. No one outside my room can have it. Then I think, well, no one knows me from Adam anyway, do they? I could be like the rest of the I could be disingenuous like some other people are on YouTube, and you don't know me from Adam, so and I ain't going to try and convince you. You either want to trade or you don't, as far as I'm concerned. You either want to learn or you don't. That's what it's all about. Right, lovely 15-minute bar. There's another. This one's rubbish. If you got the 15-minute guide, then you know exactly what I'm talking about. I'm going to put another alert on there. We want that Dow to come off, and that's going to drag the FTSE. Yes, it's on its way. Right, this FTSE should be coming as well then. Come on, look at all these indecision bars. This is all the handbag dancing. This is a long 1-hour stream, isn't it? Oh, we've still got people here as well. Great, got the diehards. Yeah. But you know, it's either moves quite quickly at 4 like this and runs down, or in 4 more minutes you can sometimes get the 10 minutes before people start closing. But the spread goes from 1 to 2 into settling. But what we really want to see is the market trading under the 9 EMA before settling, and we want to be in there. We want to be able to get a decent stop, and we want to get 10 to 20 pips out of settling. But if the market doesn't set up, then we're going to leave it alone. Not going to touch it. Market has to set up. And then you can have a look next time. So this is all recorded. You can, after we finish, you can carry on looking at the FTSE and the Dow and how they interreact together, because the Dow and the FTSE are kind of joined at the hip. We've got 2 more minutes here on this 5-minute bar. And if this isn't going to close under the 5 EMA, then I did say I was going to show you the trade on the Nasdaq. And it's a 15-minute bar, the first 15 minutes of price with the trend. And the trend is bullish. We've not looked at whether the gap was closed. That was the most prolific mover yesterday. So I would imagine gap's done by now on the Nasdaq. We'll go and have a look anyway. And then we'll probably see a lot of buying that's coming off the close, but we'll just have to have a look. So 1 minute to go. This is looking like this is set. Let's set this to 5 minutes. We want to see on balance the market coming off. When we're a lot of participants, we need to see the ATR rising, and we need to see the bears coming in. There's a normal candlesticks. So the price is trading under the 9 EMA on the normal candlesticks. On the Aikanashi, because it's momentum, it's not. We've got a red Renko blocks, green. I've been trading too long today. We've got the green Renkos. So we're just waiting for this to fall. We want this to close under the 9 EMA. Got 11 minutes to go before the market closes. Wall Street 60 points down now, which is okay. Incidentally, guys in the room, Greg's is at 21 pips. Did anyone get trade in on the pasty trade?
No.
Everyone's gone. Yeah, Irene's the pasty queen. Look at that. Look at that flat top. Doesn't get any better than that shape. They are right on 20 past. So people are starting to close this one out. The Dow is 62 pips into profit as well now. Don't get tempted to chase it. Wait for the market to tell you. If it's a large bar, then we'll go for an ATR of 11 or over the flat top. So got 4 minutes to go on this. So we've got a bar here that is 5 pips. So you want an ATR, you want to do the ATR or the swing high. The swing high is here +2. So that's 9, 10, 11. So it's fine. That would be a direct break of the 5-minute Aikanashi, and 11 pips, looking for 11 as well. And then that's never going to drop 20 pips, is it now? before settling. Now, the difference is with the cash. Now, you can't use PRT version 12 pivots because they're wrong. The market is made for a 24-hour market, so they don't take any the pivots that are put in by IG are 24-hour pivots. No such thing as a 24-hour index. The market's made. It's got to be cash pivots between, excuse me, 8 o'clock and 4:30. So you need to have your own code because the IG one's wrong. Three minutes to go. We can put 11 and 11 in. People on YouTube like confused. What the hell's he doing right to the close? Some of the things that we do are market function. You know, we know what happens. There's a market function for things to actually happen. We've got 5 minutes for a 15-minute bar on gold. I'm just looking at the prices. Gold's moving up. Yeah, both the bots are in the money. We want gold to slow down just a little bit because we want to get into it with a small bar. At the moment, it's running away with profit. But they're the robots. I want people in the room to make some money. Right, 1 minute to go. Get the handbag, pick your handbags up and start getting the trade on. That's where we're going to trade. Bang, right on that break. So that's 9480.5. Anybody in a footsie short? I'm just watching.
Yeah, just watching at the moment.
No worries.
Put the order in.
Good. Where's Terry? I think. Everyone's given up, I think. Gone home after making money this morning. Just looking right now on the list. Everyone. Sam, oh, right, Sam's in the room. Paul's in the room, Becky. Oh, yeah, Rory's gone. Oh, Rory's gone. He's on the buses, isn't he? He's driving the people around. Ben should be in. Alan should be in. Bridget should be in. Andy should be in. They're all there online. All the little lights on Terry. Alan. Travis. Okay. Right, okay. Let's see what happens. Oh, hi Ben. You're on YouTube here rather than on the room. Good on you. If you need any help with the bots on V11, just give me a shout. We've got F1 this weekend, but quite happy just to jump on for half an hour, to get you set up ready for Monday morning, Sunday evening, well, early doors Monday, because you can get some really good. You can wake up to 4% on a Monday morning. They're really good. So there's price action. Unfortunately, when you're live, you can't actually pick and choose the right amount to show you that you're a wizard trader. This is 4 minutes to the close, and we're not going to get triggered. We don't trade after the close. Thank you, sir. Would it be really great? I'm free over the weekend and a Monday all day. So, yeah, no problem. Sunday after the F1 would be good. Oh, all right. Thank you very much. All right, biscuits as well. Cheers. There you are. Got handed me double. Can you see that? Double espresso. Lovely.
Very nice.
Mm. Yes, if you drop us a note in Slack or email, Ben. I don't know what time the F1 finishes, but after the F1's finished, no problem. We'll go on Zoom, we'll share a screen, get you all configured and ready to run. And it might hopefully start trading early doors Monday and get you some money. So we're going to have to come off this. It's not going to trigger in. What I will do is we'll put a line on here and you can see the price action on what happens. So there's my alert to go back to gold. We do everything regimented. Everything's got a flipping heck. Gold's just hit another 2% profit. We didn't catch it on the recording. So robots have just smashed another 2%. And all right, there you can see the actual function happening there. Can you see here's that one stopped at entry plus a little bit. The robot has already seen the 8-pip move there, 8.7, and said we're not losing any money. And the other robot come out at 16.24 for 2% at 3886.41 there. So the other bot come out with a 2% win. It's a shame it isn't recorded, because no matter what you do, people will always say you made it up. But you can look at the recording, it was in before, now it's not. It's obviously made money.
I can confirm.
Oh, there you are. We've got something that you can confirm. Yeah.
My stops in protecting profits.
Yeah. That's what we want. Get those rupees banked. Oh yeah, while we're here, I'll just measure that. I'm sure it's 40 odd. Let's have a look. We'll just put the months up. It was last time I looked, I think it was 42%. End of December. Close on, what was that? 47% gold now, up this year. It's been a monster year. It was up nearly that amount last year. And we've been absolutely tearing it. If there's only one asset you're going to trade this year and for the rest of the year, up until December the 9th, would be gold. Ripping money out of gold using frackers, 15-minute bar reversals, fractal bots on 5 minutes and 15. It's just great. You're making, like when you think about this, if you make 2% a week, compounded, that's 160% a year. And we're making over that a day, every day on gold. I think that's just a little bit too close. Oh, 15 minutes. So this is a 15-minute bar break up here. It's whether you want to take the risk 23 pips stop you'd have to have there. So you're going to have to break out. I think what I'm going to do, I'm going to see if there's any better stops on the fractals. Run it into 5 minutes. So we do have a better stop on the fracker there, which is a 15-minute bar. 15.5. So you get away with a 16. Well, call it 7. You'd get away with 17 on that. And the way I'm going to trade this, guys, just to let you know, we're going to do 17. It's 2% trade. He who dares, no emotions. The market is telling you it's okay. We're going to take a 15-minute frac, and it's a 5-minute frac. A 15-minute bar and a 5-minute frac, they're both the same at the moment. We need 0.3 break, so 0.8 on here. Very precise there.
Steve,
Yes.
just to interrupt, sorry. It looks like the 5-day ATR one came off on the Dow, or was close to coming off.
Great. Let's have a look.
I've just moved into
Ooh, very close, isn't it?
yeah, like it was dancing on 40 for a few points. So I've just moved my stop to entry to protect profit.
Yeah, so Paul's absolutely right. When we get to around about 50% of the actual move, which is now, we always protect our risk, always protect the profits, stop to entry, make this completely free. And what we're looking for now is for either to be stopped out, no gain, no loss, or the market to drop off quite nicely. Has the S&P decided to roll over yet? No, it's still hanging around. Just a waiting game. And I'm finally we'll look at gold, and I'll show you. We'll go to the Nasdaq. So we're in here now on a 15-minute bar. It is also a 15-minute fractal. It is also a 5-minute fractal. Price action is positive, and it's with the trend from 5 minutes all the way through to a month. Doesn't get any better than that. The issue we've got is here we've had a double tap reversal. So to get around that, the way we tackle that is we're going to put the alert up into this resistance level, and then we're going to drop down onto 2 minutes, and we're going to let the 9 EMA tell us if we need to come out or not. So we're going to put that up there. We're going to put some alerts into here. When the market starts getting a bit hot, and we'll see. We've not been triggered yet. Let's go and have a look at the NAS. There you are. Wham. Straight into the close. Third of the fill. Pivot boys bought it. And now it's coming back up. So what you're looking for here, it's going to be counterintuitive. 15 minutes. The first 15 minutes of action with the trend. So the first 15 minutes of action is that bar there. Is it? No, it's that bar there. There. At 2:30. Closes at 2:45. So what you've got here, from there to there, that's a 15-minute bar. And even if it was this bar, a red bar, it doesn't matter. What it matters is the first 15 minutes of action you trade with the trend, a break of the first 15 minutes of action. So if you're on YouTube, I'm still here, but on laptop, I've had to restart desktop. Alan. Hi, Alan. Which Alan is it? Is that Alan from my room? Is that Geneva Alan? Or we've got quite a lot of Alans. We've got a few Pauls. Too many. We haven't got any Steves. They're normally pretty common. Right. So what we're looking for. Oh, it's gone quiet. Alan 59. Right. So what we're looking for here is this trade in here. And you're looking for a one-to-one risk reward. So the actual trade, although it's quite there we are. So the trade would just be under there, and you'd be looking for actually on that trade an all-time record high. However, there is a grid too, 15-minute bar there, as you can see. Just turn these off so you can see now. It's all recorded, so you can just go back and look. We've got a 5-minute, 15-minute bar trading over the 9 EMA. It has a bit more than a wick at the bottom, so it's like not fantastic. It is an okay bar. This bar here is fantastic. Doesn't get any better than that for a really bullish market. Nasdaq 15-minute bar reversal. So 15-minute bar reversal, it will be quite a meaty stop. That's 90 pips. The Nasdaq ATR, 15% ATR is 34 pips. 30% is 68. That is a very meaty bar. Now, we could modify this stop. And the reason we could modify this stop is because this has been bought on a pivot. Markets come down, and the market makers would have continued this through to knock out everyone's tight stops. And then the pivot boys are on the way. Well, the pivot boys would really, they'll have been trading here, and they would have put a stop under the daily low there. So they're already in down here, and they'll just close this out at 9 o'clock tonight, or they'll take half profits and just let it run. So what we could do here, we could use the signal bar, the bar before the signal bar, where the actual close resides, because we know this is what's known as a fade of the fill trade, and just run through it. So what we can do is measure that 15-minute bar there under the previous one, which is 43 plus a spread plus 1, so that's 45 pips. Can we get 45 pips into Camarilla breakout long? Hell yes, of course we can. So again, there we go. Unemotional. We know the strategy. We've had a look at the landscape, what's available to trade, and we're going to go for that 15-minute bar, because it's what is known in the room as a 415 reversal. We want it 35 as the break. Boom. And we're just going to take this market back up to Camarilla breakout long and take out a cheeky 1%. And that's a shame we didn't do the close on that one, but you know, that's
Alert trigger.
that's life, isn't it? Alert triggered. What's triggering? So
Alert trigger.
we didn't get the sell-off. So that's what I mean. Wait for the confirmation, no confirmation. I wonder if the Dow is stopping and turning. Yeah. Don't like the look of this. We've got a closing bar above the 9. That's not good. So we can do a few things here. We can just hit the button or hope on balance it will come down. and then we can move our stop above that bar there, the one that broke over the 9. We're desperate for this to actually come off, and it's really just dancing around the 9 EMA. We'll keep an eye on that. Let's keep a real micro eye on here. The market's been trying. It's broken 1 minute structure. This is a structure coming down. That's a fractal. I'll show you the fractal. That's a fractal there. It's been broken there. A reversal fractal, which tells you structure's changing. So to me, we need to come out of here now. Let's take the money. Come out of there. You can see the price action, what's happening. So sometimes really you gotta know when you got to know when you're wrong, then just come out. Should come down, but the market's always right. If the market is not doing, it's telling you it's not ready, it's just not ready. What we can do is put some alerts on. So we've got fractals here. There's a fractal breakout short coming here. So what we can do is we can put a stop above the fractal. If the market decides it's going to come down again, it can highlight, alert to us before we need to trade this short, because at some point today, we want this to come crashing off and close the gap. The other thing that we could do is look for a fractal reversal here. So we can go for a here. At the moment, that fractal stop would have to be 170 odd pips. But you can see here, if this doesn't break, that will give us a 67 pip opportunity, 67 pip stop. Get rid of that. Always a hopeful. See if we can extend the profits as much as practically possible. When the alert goes off, we'll be able to get a feel of where our stops should probably be if it isn't in this place. And then we can adjust that risk profile. This is the 1-to-1. That is the stop for the 5-day ATR trade. Let's have a very quick squiz at BTC. We're up over 1,000 pips on BTC, so that's all right. Did the FTSE ever change around? No, that's still going for the sky. S&P is hanging around. S&P started to make a move. Right. I think I've traded enough today anyway. What I can't ignore. If this comes back down to C-bomb, I get a break under that, then there's a gap to close there. You can see the gap is still there. That's not a gap. 220, that's a gap. Cash hours gap. There's still a hole in the market to be filled. So we've got those alerts there. Gold, that's not been triggered yet. Still waiting for that trigger. Can we drop it down to 5 and find something? No, 5 is still there. That's still a, there's still the fractal there. There's a fractal here. I'll show you the fractals. They are. Again, if you haven't got fractals and you've got Pro Real Time, you've got Trading View, you can get them off my website, download them for Pine Code and also for Pro Real Time Code. Right, I think I'm going to, the 1 hour that was going to be on has turned into 2 hours. Either, at least some of the guys have got some staying power in the on the Friday afternoons. Right, I think I'm going to go, guys. Gold, I think will still go up today, and I think we'll get some. Although we've done well, I think we can do even better. Leave your fractal bots on. If you go a 15-minute bar, trade the 15-minute bar or a 5-minute fractal, but watch into this area here and drop down to 2 minutes and use the 9 EMA principle for taking profits. And I think you won't do too bad out of that. Any questions before I go?
Which ones you leaving on, Steve? 2.3 or
This one is 2.3, yes.
Yeah.
And I'll leave 2.3 and 2.2. Because at 2.2 is cashed out already, and it's reset itself. And 2.3 hasn't cashed out yet. So rather than go for the 15 minutes, because we're at all-time record highs, if we can bite a little bit of, if we can give gold a bit of a munch into the close tonight at 10 o'clock, then especially the 2.2's little biter, we're looking for 9-pip moves. But I think the 2.3 will hit full target. But what I would do, guys, for the guys who got the bots, I'll put it in the Slack room as well, the gold bots, is make sure on Sunday evening you put your bots on, especially with any pullbacks. Just stick them on and they can do the trading while you're asleep. Okie dokie.
Cool. Thanks, Steve.
Thank you.
yeah.
Okay,
Cheers.
all right, guys. See you then. Bye.
Catch you later.
Thanks for watching
Bye-bye.
on YouTube. Thanks for watching, and we are running a live stream going now every Friday afternoon and most Tuesdays, but definitely every Friday afternoon. And come do some live trading with us, or even better, why not do some live trading with us? Try it out for a month. Come and trade in our room every day live, and see what you think about a real trading room. But yeah, live stream for me this afternoon. First one, I've been following your channel for some time and subscribed to the Daily Edge. Oh, right. How many? I've got a few Allens on the Daily Edge. Is it Alan Huxley? Alan H, Alan 59. I shouldn't say the name, should I? Sorry. We've got 3 Allens. The 3 Allens that are outside the trading room that are all subscribed. We've got quite a few subscribers outside of the room. But yeah, hopefully you're finding the Daily Edge pretty good. So give me your honest opinion, if you can, Alan, on the Daily Edge. Good, bad, thumbs up, thumbs sideways. Again, if you're a Daily Edge subscriber and there's something that you probably would like to see or change, if it's going to benefit the trading, the real trade, if it's going to benefit us all for the traders and give us information, then I'm not adverse to modifying the data that we put on. The data, as far as what's to buy and sell, won't change because they're all the best trades for the day. But as far as news releases, economic data and extended reading, quite happy to modify my AI bots to gather that information for you. So Alan's got an old view. Oh dear. At least he's still subscribed. All the Allens are subscribed still, so we'll see. We'll see if any Allens drop off. But yeah, have a go. Really, there's not a lot to lose really on the daily hedges tenor, and everything to gain. And a bit of live trade. If you think this live room's okay, we do this day in, day out, every single day. Right, I'll stop talking because I keep waffling on, and I'm going to go. So see you guys. Have a great weekend. I'll end the stream now.
Cheers.
There we go. There's a stream gone, and the room